This is the Daily Market Comment by Marios Hadjikyriacos. I'm Christina Marujos. Thank you for joining us at XM.com. The pivotal meeting between the American and Chinese leaders concluded with a market-friendly outcome as the two sides agreed to restart trade negotiations and hold off from imposing any new tariffs for the time being. What stood out, though, was that the U.S. also agreed to roll back some of its restrictions on tech giant Huawei in what seems to have been the price for getting Beijing back to the negotiating table. The result was a classic risk-on reaction in markets, with futures tracking the major U.S. stock indices, pointing to an approximately 1% higher open today. The other major winner was the U.S. dollar, whereas safe haven assets like the Japanese yen and gold are on the retreat. While the resumption of negotiations is clearly a positive step, nothing much has changed in the big picture, as the two nations remain far apart on key issues. And even though the ceasefire may keep risk sentiment and the dollar supported for a few days, it's unlikely to be enough to turn the tide and reverse the bigger trends that have been developing in the recent weeks. Crude oil opened higher on Monday following the optimistic trade signals over the weekend. That wasn't all, though, as the latest headlines suggest that Russia and Saudi Arabia agreed to extend the OPEC production cuts, painting a brighter supply picture as well. Attention now turns to the OPEC meeting that will commence today in Vienna. A 9-month extension of the current output cuts is likely needed to push oil prices higher from here. As for the economic data today, in Britain, the manufacturing PMI for June is due. As usual, though, the pound is likely to respond more to politics than economics, so the focus remains on the Tory leadership race and any Brexit-related comments from either of the two remaining candidates. In the U.S. now, the ISM manufacturing survey will be among the final major pieces of data ahead of the Fed's July meeting and could therefore be crucial for the dollar. A solid ISM print could add more credence to the narrative that the Fed won't cut so aggressively and thereby help extend the current recovery in the dollar. This was today's Daily Market Comment at XM.com. Have a great week.